All right, let's talk about a story that's been all over the headlines, but with a twist you might not have seen. We're going to dive deep into China's really complex and, frankly, worsening debt crisis. So, you've probably seen the news, right? The empty apartment buildings, the failing developers, and yeah, that's a huge deal. But the real story, the one with potentially much bigger consequences, it isn't just about property. It's about a hidden mountain of debt. Okay, let's get into it. So first things first, let's start with what we can actually see. The most obvious part of this crisis is playing out right now in China's absolutely massive property sector. And there is no bigger symbol of this whole mess than the real estate giant Evergrande. When it was recently delisted from the stock market, that wasn't just some company failing. No, that was a seismic shockwave that was felt across the entire global financial system. And just to give you a sense of the scale we're talking about here, Evergrande failed to manage a jaw-dropping $23 billion, and that's just its offshore debt. That is an almost unthinkable amount of money, and it points to a massive failure of financial management and, frankly, oversight. But look, this isn't just about one bad apple. Not at all. Experts see Evergrande's collapse as a symptom of a much, much deeper problem, a systemic failure to manage debt across the entire property sector. And that's just the tip of a very, very big iceberg. Okay, so if the property crisis is just the tip of the iceberg, what's lurking underneath the water? This is where we get to the hidden part of the story, this absolutely colossal mountain of debt being held by local governments. Now, to really get this, you have to understand something called a local government financing vehicle, or LGFV for short. Think of these as basically shell companies. They're set up by local governments for one main reason: to borrow huge sums of money for things like roads and bridges, but to do it off the books. This keeps all that borrowing separate from the official government debt records. So, how much have they borrowed? Well, the estimates are just breathtaking. We're talking somewhere between $7 and $10 trillion. Yes, that's trillion with a T. This is the hidden debt that's been secretly fueling so much of China's growth for years. You see, if you just look at the official numbers, China's government debt seems pretty manageable. But the moment you add this hidden LGFV debt to the pile, the real picture comes into focus. And wow, is it dramatic. The country's true government debt to GDP ratio just skyrockets to a staggering 120%. So, with all this debt, you'd expect to see chaos, right? A wave of defaults, a financial panic? Well, this is where things get really weird. Because on the surface, the market looks eerily calm. And the reason for this calm is a really strange contradiction. On one hand, the government has basically forbidden state-owned developers from defaulting on their public bonds. And what do you know? On the other hand, corporate bond defaults have pretty much vanished this year. Does that sound like a healthy, functioning market to you? The answer, of course, is no. This is not real stability. It's a state-managed illusion. By just stepping in and preventing defaults, the government is essentially hiding the symptoms of the crisis. The risk hasn't disappeared. It's just been swept under the rug, creating this totally false sense of security. But here's the thing. You can only suppress risk for so long before the pressure finds other ways to escape. And now, across China's wider economy, the system is showing some really clear signs of that strain. The economic warning lights are flashing all over the place. Revenue from land sales, which local governments depend on, is dropping. So they're getting desperate. They're issuing over 2 trillion yuan in these special bonds just to plug the massive holes in their budgets. And all this is happening while you've got this chronic overcapacity in manufacturing and really weak consumer demand. It's a recipe for serious economic stress. And the world is definitely taking notice. Just in the first half of 2025, the credit agency Fitch officially downgraded China's sovereign credit outlook. That's a huge signal that international experts are seeing more and more risk. With official government debt projected to climb towards 74% of GDP by 2026, the country's financial foundations are looking less stable by the day. So is this whole thing just a hopeless situation? Is it all doom and gloom? Well, not necessarily. The problems are enormous, sure, but there is a recognized path forward. A set of steps that could help China rebalance its economy and actually navigate its way out of this crisis.
Analysts have pretty much laid out a four-part strategy. First, bring all that hidden debt out into the open. Second, truly, finally reform the property sector. Third, rebalance the entire economic model. And fourth, build a much healthier, more diverse financial market.
So what does this blueprint for reform actually involve? Well, for debt transparency, it means finally cleaning up how LGF fees are accounted for, bringing that hidden debt into the light. For the property sector, it means letting failed developers actually go through restructuring instead of just bailing them out. To rebalance the economy, China would have to shift its focus away from just land sales and infrastructure and move toward actually boosting consumer spending. And finally, a healthier bond market means encouraging more private companies to get in the game, diversifying risk away from the state. And really, that's what this all comes down to. China is walking a tightrope. On one side, you have the state's intense drive for control and stability at all costs. On the other side is the cold, hard reality of a massive systemic financial crisis. The path to rebalancing is there, but it's going to require some incredibly tough, probably painful decisions. And the big question that leaves us with is, can Beijing pull it off? Or is the entire world about to feel the fall?